In this video, we're going to look at a neat little trading strategy for the S&P 500, first published by Larry Connors and Cesar Alvarez back in about 2010, I believe. Now, I've actually done a video on this strategy before, and I'll link that for you so that you can watch that too. In their book, Short-Term Trading Strategies That Work, Larry and Cesar demonstrate a very powerful buying technique for the S&P 500 using the RSI indicator. Their general entry signals are the same, but they also show a various amount of different exits that all work quite well too. And today, in this video, I'm going to introduce another exit which is completely different to their exits, and it has the benefit of increased net profit, reduced drawdown, and a higher winning percentage of 85%. Firstly, we'll look at the basic strategy and how it performs. Then I'm going to introduce a stop loss. I'm just going to use a fixed pip stop loss. Now, Larry and Cesar don't actually use a stop loss in their documentation or in their studies, because they've actually found that with this type of mean reversion strategy, stop losses actually just reduce performance. And he's right, I've tested it lots of times. However, for me personally, putting money on and actually trading this strategy, I like to have a stop loss because it gives me a very good indication of where my worst possible loss per trade is going to be. That way it helps determine position sizing, knowing or having a decent idea of my maximum risk per trade. Once we have the stop loss in the strategy, we'll look at the results, and then I'll apply my new exit technique. We'll look at the results for that new exit, and then we'll fine-tune that exit as well for even better results. We're going to be looking to backtest the strategy over quite a lot of data. I'm using data from January 2005 through till April 2021. Now, I'm actually using data from Oanda for the S&P 500 CFD. However, it does replicate the E-mini future very well. The results that you're going to see in my study are going to be in ticks rather than a dollar value, because the value of the CFD is slightly different to the E-mini future. So if you want to imagine the results using the E-mini future, then just multiply my results by 12.5, because the E-mini future is worth $12.5 per tick. If you're looking to trade the micro E-mini future, then multiply my results by 1.25 to get the dollar value per contract. I'm not going to go into too much detail about the original strategy. The rules are very simple. So if you haven't already seen it, watch that video I'm going to link, and there's even a download that I created a free report showing you the results, all the rules. You can download that for free. I'll link that either in this video or in the older video too. So let's go over to the computer and get into the strategy and have a look at this new exit idea that I want to show you. Looking at this first workspace, then we can see a load of trades on the chart. For those of you who don't already know, this strategy is a long only strategy, and very briefly we're using a 2-period RSI, so not a normal 14 period, using a fast RSI applied to the daily chart, and we're looking to buy the market when the RSI crosses down below 10, and we're only looking for buys when the price is above the 200 period moving average. So if you look down here, we've got no buy signals because the price is not above the 200 period moving average. Now, Larry and Cesar do document a few different types of exit. The types of exit I'm using for this basic strategy is exiting when the RSI crosses above 70. So he also talks about using 5-period, 10-period moving averages, but just for this example, we're using for when the RSI crosses above 70. So let's have a look at the result. We've got a net profit of 1,158 ticks. We've got a maximum strategy drawdown of 328 ticks. The equity curve is quite nice. It's moving in a nice direction. This strategy, interestingly, did have a bad period starting around the end of 2018, but nice to see that it's recovered since then. We got 95 trades over that period, 80% profitable. The average trade is 12.2 ticks, and we've got a largest losing trade of 141 ticks. So now we need to introduce a stop loss, and looking on this next workspace, this is where I've done an optimization for the stop loss value. But like I said earlier, Larry's done a lot of testing. I've done a bit of testing on stop losses, probably nothing to his extent. But Larry and Cesar discovered that on this type of mean reversion strategy, we're buying weakness, then stop losses actually hinder performance. But for me personally, I like to know where the maximum risk is likely to be. Obviously, sometimes we do get slippage and we slip through our stop loss, but not by any sort of drastic measure. Having that stop loss in place gives me an idea of what my maximum risk is going to be, and then from that I can decide on my position sizing. You could use other methods to determine what the position sizing is going to be, like looking at the largest historical loss or the worst case scenario, but that's only over that data period that you're looking at. That could always increase in the future. Nobody knows. At least with a stop loss, you understand there will and there can be a little bit of slippage, but you know roughly that is going to be your worst case. So let's have a look at the results of the optimization using a fixed tick or dollar stop loss. And here's the results. You can see in this right hand column, this is the stop loss value, and these are in ticks, so 10 ticks, 20 ticks, etc. I've gone all the way through to 300 ticks, and we can see that using no stop loss, we've got this net profit of 11.58. We've already seen this, and an average trade of 12.2 ticks. Percent profitable, 80%. And the minute we start using a stop loss, you can see how this net profit does drastically go down. The more we go down the table, we get to 290 ticks, and the results are the same as pretty much using no stop loss, because that stop loss was never hit in this backtest, and you could argue that it's not really even a stop loss because it's never hit. So what I'm looking for is the smallest possible stop loss within reason. So looking down the net profit, we can see how it starts very small and then it starts to increase, and we get to around this area where it's maximum. And average trade, again, we've got maximum kind of average trade, net profit, we've got an 80% win rate, around about 110 ticks. We start to go a bit further and the results do start to decrease, and then they start to increase again. But by that time, when they start to increase, we've got a stop loss of well over double of what the 110 ticks would be. So for this case, for this study, I'm going to use 110 ticks as our fixed tick stop loss. So let's look at the performance report. Firstly, let's look at the net profit, and we can see we've already seen that we got a reduced net profit. The maximum strategy drawdown, 361. That's actually slightly more as well, but like I said, we expect decreased performance for the luxury of knowing where our maximum risk could be. The equity curve has suffered, especially lately. We've still got 95 trades and an 80% win rate. The average trade has decreased to 9.3 ticks, and the largest losing trade is actually smaller now, because that's obviously experienced a bit of slippage, but that's around about where the largest loss is going to be with our 110 tick stop loss in place. In this next workspace, we're keeping the 110 tick stop loss, but we're actually changing the exit. Now, the exit I'm going to use is an idea that I've used quite a lot and made a few videos about. An idea I found from Larry Williams, and it's the first profitable close or bailout exit. So what we're looking for is at the close of every day, looking to see if the strategy is in profit or not. If the strategy is in profit, then we exit at the open of the next bar. So that's what we're going to look at now. We're disregarding the RSI exit that we first used. We're just looking, are we in profit or are we not in profit? So let's have a look at those results. Looking at the net profit is way down, in fact, so this isn't very good. 445 ticks. The max strategy drawdown has increased to 436. The equity curve, I would say, is even worse than before. Looking at the total trades, we've got a few more trades. Our winning percentage has increased, so that's nice. Our average trade has definitely decreased. And our largest losing trade, because we have that stop loss in there, is actually the same at the moment. So overall, that's actually made things worse, hasn't it, than the original RSI exit. But what about if we look at the value of in profit after each day? With this study, what we're doing is we're looking to see at the end of the day, are we in profit? Is the balance positive or is it negative? And then exiting if it is in profit. But what about a different value? What about if we need to see that the trade is 20 pips in profit before we exit? If it's less than 20 pips, then we stay in the trade. Or if it is over 20 pips, then we exit. Perhaps there's a better value than just saying, is it in profit or not in profit? So that's the next optimization that I've looked at. The amount of ticks in profit it has to be. So let's look at that report. And we can see this column is profitable close. This is the amount of ticks we have to be in profit before we exit. Now you can see there's lots of different options that we can use here. As the amount of ticks in profit increases, generally so does the net profit. It actually maxes out about here, about 80 ticks in profit. However, look at the reduction in the amount of trades. We've now only got 50 trades, not that original 95 trades. The average trade is huge at 32 ticks. Percent profitable has gone down a little bit. But what I wanted to do is I wanted to choose a result that gave quite a high number of trades, had a high percentage win rate, and had the lowest drawdown. So if we look at the maximum intraday drawdown, we can see that the least is around about 30 ticks here. We've still got 76 trades. We've got a net profit that's the best so far, and we've got an average trade that's the best so far, and also percent profitable is over 85%. So that's the reason that I'm going to choose 30 ticks. And let's have a look at the results. We can see the net profit is 1,382 ticks. The maximum strategy drawdown has now decreased to the lowest yet of only 283 ticks, which is great. The equity curve is certainly the best yet since we've introduced that fixed tick stop loss, which is good. Looking at the total trade analysis, we've got a few less trades at 76. We know that we've got percent profitable over 85%. We've got the best yet average trade value, and we've still got the same largest losing trade because of that stop loss. So the only thing that I think could be better is the equity curve, because recently it's gone a little bit sideways, which is a real shame. But that seemed to happen as soon as we applied that stop loss, and we know, from testing and what Larry and Cesar say, that the stop loss does decrease performance in this type of strategy. Out of interest, let's just remove the stop loss with this new exit and see how that affects the equity curve. So now I'm going to remove the 110 ticks and put it as 0. And now let's have a look at the equity curve. See, now we can see the equity curve is certainly moving up and making new highs. So that's really good. So that shows that both the entry signal of Larry Connors and the exits that we've applied now, they're both working quite well. We can see some big drawdown periods here. That's obviously because we don't have that stop loss. But in order to remove those periods, we use the stop loss, but we do suffer overall profit. I wanted to share this study that I've done with you, just to demonstrate that just by tweaking things like the exits on even existing published strategies, you can get different results to meet your objectives. You might want a higher win rate, less drawdown, or maybe just maximum net profit. You can see by doing adjustments and choosing the appropriate input, we can change that depending on exactly how we want the strategy to trade. So I hope you like these sort of videos, and if you do, please give it a thumbs up. And if you want to see more, then please subscribe, and I'll continue doing these sorts of videos if you're finding them useful. With this particular strategy, I'm not saying go out and trade it immediately, as is. I've only just completed the study, so what I will do is I'll probably watch it for another few months, see if it does make new highs, and if it does make new highs, then quite well will put it in my real account and trade with real money. But what I do want to encourage you to do is do these sorts of tests for yourself. Find out what works and what doesn't work. Find out how each market does behave. Remember, if you want to see the original video that I done a few years ago and download the report with Larry's original rules, then I'll link that somewhere on this video, and I'll probably stick it in the description down below so that you can have a look at that too. And let me know in the comments what sort of strategy videos, or maybe you want to see videos on programming or multi-charts or money management. Let me know in the comments below, because then I can make the videos which are going to be most helpful for you. But until the next one, this is Jared Goodwin, and thank you.